Welcome back to Capital Markets Quickie. I'm your host, Endrit Sella, here to break down the ins and outs of the stock market from yesterday. Yesterday, Wall Street saw a reassuring uptick, with the Dow Jones Industrial Average jumping nearly 350 points, a solid gain of 0.9%. This marks its seventh straight session in the green. The S&P 500 wasn't far behind, climbing 0.5% to cross back over the 5,200 mark, a spot it hasn't seen since early April. The Nasdaq Composite saw a more modest rise of 0.2%, reflecting a mixed day for tech stocks. So, what's driving the market? Well, the labor market is showing more signs of cooling, and that's catching investors' attention. Initial jobless claims ticked up to 231,000 last week, the highest since last August, suggesting the job market might be losing some steam. This slowdown in hiring has sparked renewed hopes that the Federal Reserve might lean towards cutting interest rates come September. In sector news, real estate and utilities led the charge, showcasing strength in areas typically considered safe when the economy shows signs of slowing. On the flip side, technology and communication services didn't quite keep pace with the broader market. Now, turning to the corporate front, we saw some downward pressure from ARM, the chip designer, which delivered a gloomy annual revenue forecast. This threw a bit of cold water on the red-hot expectations for AI-driven growth in the chip sector. ARM's shares dropped about 2%, and this sentiment dragged down other chip makers like NVIDIA and AMD as well. And then there's Roblox, which really took a hit, plummeting over 20%. The company reported that players are spending less within its platform, which is a big deal for a business that relies heavily on in-game transactions. All in all, investors seem cautiously optimistic that easing in the labor market could prompt the Fed to cut rates sooner rather than later, providing a potential boost to the economy. However, with the market's rally broadening out, it's clear that investors are also hedging their bets across more defensive sectors. That wraps up today's Market Quickie. Make sure to tune in tomorrow as we continue to break down these trends and what they mean for your investments. Stay savvy, stay smart, and see you in the next episode of Capital Markets Quickie.